All right, it's 12 o'clock. Let's get started. Said we'd start at 12 o'clock, and we're going to start at 12 o'clock. And see, we've got a bunch of people already online with us. So we'll get rolling. Um, this is called charitable planning, maximizing money and purpose. And I want to state in advance that personally, I think this is probably the most important topic in personal finance, charitable giving. You might say that that's a bit extreme to say this is the most important topic, but I believe that there's a flow when we learn to be generous. Can I prove this? No, I cannot prove this beyond a doubt, but I believe that there's a flow in life when we're generous. And I kind of think of it this way. If you create a swimming pool and you fill it full of water, will 2 years from now or 5 years from now be it as fresh as if you had a spring in your yard and you created a rock bed that the spring would flow through and keep going on and hit a pool, and then the pool would fill with the water of the spring and then flow out and keep going on? And the answer is we know that for a fact that the spring will be the healthiest water, or the pool that is created from a spring that is flowing, filling it back up again as it releases the water on the other side. I believe the same is true in personal finance, and that it's important for everyone to understand the power of charitable giving. And keep in mind that when I say charitable giving, it doesn't have to be to a charity. It can just be to somebody in need, and the power of that and the purpose behind that. So this is a very important topic in my mind. Some of the things we're going to talk about you can only do with a charity, but when we get to the second part, the purpose part, that's where we're talking about the more esoteric things to charitable giving. All right, so let's get with it. The first thing that everyone needs to know, oops, better do this or else I'm going to get in a hard time. I do that all the time. But anyway, I'm mumbling to myself. That's okay. I can do that. I'm 67. I'm allowed to do what I want now. Anyway, and my mother used to say that I'm 79 years old. I can do what I want to now. Anyway, um, uh, charitable receipts. It's if you are charitably inclined to a charity 501(c)(3) or a church. Now this is an interesting point. Did you realize that churches are typically not 501(c)(3) ordained by the IRS? What am I saying here? So if Drew wanted to create a tax deductible entity that you could contribute money to, I could do one of two things. I could either go to the IRS and say, this is an entity I want to create that is charitably inclined. Here's my charitable purpose. I want you to accept this, and I'm willing to abide by all your rules and follow all your 990s and all that kind of stuff, and give you the information you're looking for, et cetera, et cetera. And if the IRS accepts my application for a charitable organization, it becomes a tax deductible donation entity people can give money to, simply said, and get a tax deduction. The other way I could do it is I could just have a meeting here in my house, and I could call it the Church of Drew, and I could have prayer meetings. I could have worship services. I could have meditation. I could have whatever that is considered religious activity. And I become a charitable deductible entity that the IRS can challenge anytime they want to. But I didn't file anything. I didn't say hey, I'm filing as a charity. I'm just saying, hey, I'm a church. And churches are automatically tax deductible. That's how you see some of those, those high profile scam churches, where they're claiming that their donations to them are tax deductible. And the IRS comes in and says, no, you're not a religious church, and so forth. That's how they do that. And, but if you're legitimate, prayer, worship, meditation, sermons, et cetera, which you'd expect in a church, and you could prove that on an ongoing basis with a congregation, et cetera, you're tax deductible no matter what. But that entity, that church or that 501c3 still has to give you a receipt, okay? And so if the IRS comes in and questions me, I have to have this receipt. Now, here's the interesting part of the receipt. The receipt must be in hand at the time you file your tax return. So April 15th of 2024, I put down a whole list of charitable donations I made. If they can prove that I did not have a receipt for one of them on April 15th, no matter what the amount of money is, no matter how much I can prove that I gave it to that charitable organization, and it's a denied deduction. And the IRS has actually been using this tactic to deny deductions for taxpayers. I've been questioned twice over the last 20 years to send all my charitable receipts to them. Now, of course, if they and here's an important thing to keep in mind. The IRS does not call you. They do not show up at your door normally. Now, that can happen, but they don't call you and threaten you to send all your charitable receipts. Normally, it comes in the form of a letter. And, that's the way you get that. So I'm going to take questions. So Brian has raised his hand, so I'm going to take Brian's question. Yeah, Brian, how can I answer your question? Brian, did you raise your hand? Ask to unmute. I guess Brian didn't raise his hand. So we will just move onward and assume that his raised hand is not. Let me see this. Let me see if I can do this. No. Anyway, you got to have that charitable receipt in hand. And here's what the charitable receipts are. Has to name the charity and other identifiers of who the charity is, such as their tax ID number. It's got to have more than 200, you need a receipt if you gave more than $250. So let's say I gave my church $200 5 times in the course of the year. Never more than $250, not more than $3,000, no receipt necessary. All I have to do is have canceled checks or credit card statements or whatever to prove that I gave that money to them, okay? But if I gave 250 10 times during the course of the year, or let's put it 20 times during the course of the year, I need a receipt for either every single $250 or a receipt at the end of the year that says I gave $5,000 and I gave it on January 10th, February 15th, February 28th, March 10th, May 15th, May 30th, June, et cetera. So either one, I can have a receipt for each one, or I can have one statement at the end of the year specifically stating each contribution that was more than $250 and the exact day that it was given. But the big thing is the statement must say, the receipt must say, did I get anything for my charitable gift? No goods or services. And if I'm questioned by the IRS, I send it all into them, and they find a receipt missing, they'll deny the deduction. Or if I send all my receipts in and one of those receipts doesn't say no goods or services received, they'll deny the deduction because of the bad receipt that I received. So if you get questioned by the IRS, and it will normally come by mail, make sure you review it with a competent tax advisor to go over it and say, okay, you got all your receipts, they're all in proper order, they state the right dates and times, and they say no goods or services. Feel free now to send that off to the IRS. And if you don't have one, you can go back to the organization and say, hey, your receipt didn't say no goods or services. Will you reissue it with the same date that I need before I send this off to the IRS? So that's very important, charitable receipts. Now, one of the most powerful ways to give to charity economically is through the qualified charitable distribution. The qualified charitable distribution. And this is only available when you are over 70 and a half years of age. You say, why 70 and a half, Drew? And the answer is, I have no idea. It's just the law. It used to line up with the required minimum date law, age law. So when people were forced to take it out of their IRA, they came up with this idea of, well, let them give it direct to charity if they don't want it or need it. And they'll make it a tax-free distribution to the charity. So that's where the date came from. But then the question is, well, why did it require minimum distribution date? Why was it 70 and a half? And that's the mystery. We don't know that answer yet. But you can't do a qualified charitable distribution from anything other than an IRA. Now, hear that. And it's very important. If you have a 401k, you know, like a lot of our clients, you know, we have a lot of government worker clients, so they have the thrift savings plan. You know, you can't do this from the thrift savings plan. You can't do this from the Maryland 401k or the Maryland deferred compensation. You can't do this from your McCormick 401k or your Constellation Energy, Exelon 401k. It can only be done through an IRA, an individual retirement account. And you're only going to do it through a traditional IRA. Yes, theoretically, you can do it from a Roth IRA, but I would never, it would have to be a very unique circumstance that I would ever consider using a Roth IRA to do charitable qualified distribution. Now, let's say somebody really likes their 401k, but they want to do qualified charitable distributions. What you would do is you would just, in your 401k, you would take a hunk of money out, roll it into an IRA. Once it gets into the IRA, then make a qualified charitable distribution. That is, if you don't want to leave the 401k totally. And there are people that want to do that. Now, me personally, I think you ought to do just a whole lump sum distribution unless you're still working. I get that a lot too. Clients are in a 401k, they're still working, so they don't have to do a required minimum distribution after the age of 73, but they want to do the qualified charitable distribution. This is the tactic we use. We take a hunk of money, we do a direct rollover into an IRA. Once it gets in the IRA, boom, we do the qualified charitable distribution. The max that you can do now is $105,000 per person. So if I'm married, I can do 105 out of mine, and my wife can do 105 out of hers if she wants to. I can't use her 105. She can't use mine. So she has to have her own traditional IRA in order to do it. But you know, it is per person, and that 105 is being increased now by the rate of inflation. So that's a good thing. Let's go on. Second way to do max efficiency in economic charitable giving is through a donor advised fund. In a donor advised fund, what we're doing is These are investment accounts that are strictly for charity, set up by brokerage firms like Schwab, like Fidelity. And these brokerage firms, when they set these funds up, if I contribute money into it, it's automatically no recourse, irrevocably going to charity. It might not go to charity this year. It might not go to charity next year. It might not go to charity for 20 years. But sooner or later, it's got to go to charity. And that's the key to the donor advised fund, is that it's got to go to charity once it's in there. Now, let's say that I want to give to 10 charities this year, and I'm going to give them all $2,000 each. The beauty of the donor advised fund, first off, is that I can give one $10,000 donation to the donor advised fund, get one charitable receipt, and then make grants to those 5 charities for $2,000 each. I don't have to chase 5 charities down to get the receipt. And if they're small charities or churches, they normally don't do them right. And they normally don't send them out in time and so forth. So you're constantly searching them, searching them out. The beauty of the donor advised fund is when I put money in there, they give me a receipt immediately. And if I give 5 to them, they're usually very efficient. They give it to you right away, like within a day or two. And that's a beauty of it, number one. Number two, I can keep it invested, as I've already said, and grow the money over time. So I could actually do it as like a little endowment. I could put the money in there. I could pre-fund like 5 years worth of contributions, let the money stay invested, and all the earnings on that money will be tax-free also, going to charity. And I can give a lot more over 5 years than I would have if I just took it out of my cash flow every year. And here's the real big benefit of the donor advised fund. Let's say I bought Apple 20 years ago, and I got tons of clients who bought Apple many years ago, or McCormick and Company many years ago, and the stock is ridiculously appreciated. And but they're very charitably inclined. So I say to them, look, let's take a hunk of Apple stock or McCormick, let's put it in the donor advised fund. So let's say I paid $10,000 for a hunk of Apple stock and it's worth $100,000. And I say, okay, so I've got a 10-fold appreciation on it. And I say, okay, how much do you want to give charity over the next few years? And they say $20,000. I say, okay, let's take 20,000 of Apple stock that you paid 2,000 for, and let's put it in the donor advised fund. So I paid 2 for it. I've got 18,000 of profit, and the law says that I get a $20,000 tax deduction for that Apple stock that I put into that donor advised fund, but I don't have to report that it's all capital gain. 18,000 of it is capital gain. I don't have to report it. I get a deduction for $20,000. Now, a very important point here to make is that this highly appreciated asset must have been held by you for 12 months. So let's say you were fortunate enough to buy NVIDIA on January 1 and you paid $1,000 for it. And NVIDIA is now worth $2,500 because it's up 150% this year. But you've only owned it for 6 months. And you donate the NVIDIA stock into your donor advised fund because you think, well, it's highly appreciated and I don't want to pay taxes on it. And I'm looking forward to selling it now because I've made $2,500. I made $1,500. That doesn't work because you only get a deduction for what you paid for that stock if it's under 12 months. So it's got to be highly appreciated long term, more than 12 months held by you, capital appreciation. And here's another really cool thing. You can donate anonymously. I don't know about you, but I despise giving money to a charity and then getting 10, 20, 30 emails or mailings back to me saying, please donate more, or whatever. And they're just constantly barraging you with, and charities sell to other charities. And they say, yeah, here, I'll sell you a list of really good clients that donate to me. You're similar to me. So you give me your list, I'll give you my list. And you see if you can get more out of them from you. And, it's a business. And trust me, it's a business. And giving to them anonymously is one of the beauties of the donor advised fund. And lastly, you can make your donor advised fund as a personal thing. You can name it yourself and make up your own name. My donor advised fund is called the Cornelius Fund. You say, Cornelius, where does that come from? Well, it comes from the book of Acts. Peter goes to visit the house of Cornelius, and it says there that God saw his alms, his giving, his charitable giving. God saw his charitable giving and blessed him for that. And I always thought that was a cool verse, that this guy was charitably inclined and God blessed him because of his charitable giving. Alms is typically giving to widows and orphans. It's not giving to the temple and things of that sort. It was giving to widows and orphans, those who could not repay you for what you're doing. But God saw it and repaid him for what he was doing. That's why I call it the Cornelius Fund. But then you can also pass the fund on to your children when you pass away, make them the successors of the fund, and force them to now have to continue to give that money because they cannot take it back. And so it's also a practical way of forcing your children to use the funds in a charitable manner, and and helping them. Now, you just don't do it blindly. You got to talk to your children about why you're doing that and what you want them to do with it also. So donor advised fund. One of the more technical ways of giving money is through a charitable annuity trust. This is a very complicated, very expensive process, and it can be done a number of ways. But typically with this, what we're doing is we have a very, very big capital gain. So for example, it was actually 2000. 2000, I had the ability to work with a spinster lady who was about 75 years old and no family whatsoever. Well, she actually had family, but totally estranged from them, and lived by herself, had no children and no one else, no friends really. Kind of an eccentric lady. Her name was Beatrice. And she called me and asked if I would do her tax return. And I was like, I don't want to do Slay's tax return. There's no benefit of doing this, but I really felt led that I needed to go meet with this lady. And I didn't understand why, because I felt like it was a waste of time. So I said, yeah, I'll do your tax return, and I go down there to meet with her. And she gives me her tax documents. And when she gave me her tax documents, the first one was a dividend from General Electric. Now, to be honest with you, this blew my mind away, because she's living in a house that looks like it's close to ready to fall down. Okay. She really didn't upkeep it very well. As far as I could tell, she was living off of about $8,000 or $9,000 a year, because she did not get any Social Security, because she never worked her entire life, never worked. And since she wasn't married, she wasn't getting anybody else's Social Security. She wasn't disabled. She was eccentric, but she wasn't disabled. And when I get this GE dividend statement, it says she got like $10,000 or $11,000 of dividends from General Electric. Well, my mind starts racing immediately because I knew General Electric back then. General Electric was run by Jack Welch at that time, and it was on a tear. Company was going through the roof. It was one of the big high flyers of the 2000s and had gone up like 3,000% in the last 5 years or something ridiculous like that. And I knew that the dividend rate on General Electric was like 0.1%. Well, if your mind works like my mind with math, that meant that thing was worth like $2 million or something ridiculous like that. And the thing was worth about $2 million. And I'm thinking, wow, I mean, she's got a lot more money. And then we got it all out, and she was worth like $2.2 million. But she had no medical insurance because she didn't have any Social Security, so she wasn't approved for Medicare. And so I thought, okay, the best thing I could do is just provide a stream of income to her for the rest of her life. And that way, if she doesn't have medical care, all they can do is garnish her income. And, and I don't want to sell this stock and realize all these capital gains immediately. So I formed a charitable annuity trust and gave her an income, kept a hunk of money so that she always had cash, moved her into Charlestown, and allowed her to live in Charlestown for the rest of her life, which I believe was about 5 more years. And she lived there happily ever after, got her check, paid all of her room and board, and she got meals from the cafeteria and so forth. And even when she had major medical bills at the end stage of her life, all they did was, take what assets there were left over. And we got her on Medicare, A and B, but we had to pay a steep price for it, and so forth. But this is technical. You would only do this if you have a very highly appreciated asset and you want to minimize the consequences, and you're very charitably inclined. And she was. She had specific charities she wanted to give to, and we set it up. And so when she died, her charitable annuity trust went boom right off to these charities. But in the interim, she got the income from it. So it was a great tool. Nowadays, you can do this direct, like the Jewish Association, the Associated, as they call themselves, is very big in this, that you can now do 50,000 of your traditional IRA when you're over 70 and a half, as part of your qualified charitable distribution. So you can do the qualified charitable distribution into a charitable annuity trust and get an income from that trust during your lifetime. And then at the end, the trust will disperse right out into the charity, whatever's left. And all you do is pay taxes on whatever income you get from the charitable annuity trust. There are some that are off the shelf, like the Associated does that. Many universities have charitable annuity trusts that you can deposit money in, get an income for the rest of your life, and then at death, you get the money goes directly to the charity that set it up for you. And keep in mind that if I had like Beatrice, she gave this GE stock in. It was a cost basis of about $15,000, worth like 1.2 million or 1.5 million, whatever. And we donated that into the charitable trust. And she got a tax deduction for like $350,000. The long story as to how you calculate that tax deduction, but she got a tax deduction for like 300 some thousand, and she paid capital gains tax on the majority of what income she received. It was like the best of all worlds. I mean, if you have this situation, it can be extremely beneficial, but it is unique and it's a lot more technical than the average person's going to be dealing with. All right, now let's get into the purpose of charitable giving. As I said earlier, I believe wholeheartedly that charitable giving is one of the most powerful things we can do in our life. I can't prove that, but there is a flow that happens when we're charitably inclined. And it doesn't have to be to a quote unquote charity. It just needs to be that you are generous. And if you're generous only to those that you care about and love, that is not charitable giving. Charitable giving, in my opinion, is when you give something to somebody who can't repay you for what you've done for them. Okay. And that's the concept. So the first thing we have to understand, as I said earlier, is that charitable giving is a business. It's a big business, and there's a lot of psychology they use as to hammer you to get you to drive to give money. And this is what we want to avoid. We want to be out of the mainstream of charitable giving that's designed from a business psychological motivation to give. I don't want to be part of that at all. And they do it with guilt, sympathy, quote unquote, relationship driven. You're alumni. You should feel united to your, and helping those that helped you. And look what this university did for you, or whatever, or look at the situation with this person or this individual. They use children a lot to try to make you feel like you need to give. And hey, if you give to things like that, great, it's better than not giving at all. But I want to make sure that you're giving from your heart, that is thoughtful about what I'm giving and why I'm giving it, as opposed to be driven by emotions that somebody's trying to evoke in you to make you feel compelled that you have a responsibility to give. No giving should ever come from a quote unquote responsibility. It should come from a internal joy of saying that I've been incredibly blessed to have what I have. And I do have a responsibility over what I have, but I'm giving out of the joy of what I have, not because I feel like, gee, I have this and they don't. And, gosh, I feel guilty that I have this and they don't, and or oh, look at that terribly sad situation, I'm going to give because I feel guilty about how their life is and as compared to my life. That's not the way we want to give. And I don't want to give to some sales focused or bombardment of requests. And I see that too often. Clients come in and they got a list a mile long of 25 here, 50 there, 100 here, 100 here, et cetera, et cetera. And I think to myself, what unfortunate that that money was given away to all these different things, and there was really no concentrated focus on why they did it. So the concept of deep relationship that is meaningful is, to me, one of the foremost things about giving money. I personally focus a lot of my giving on what I would call, quote unquote, micro charities. Micro charities. Micro charities are where they're very small for the most part compared to the big ones. And I'm not saying the big ones are wrong in any way, shape, or form, but the charities that I typically focus on are small. I know the people who have organized the charity. I know the things that they do. I know that all the money is going to help the different people. And I know that they are communicating the messages to the people that they're influencing, that it's not just them, but it's all these other people who are helping to be part of this. And they communicate that, and it creates a deep relationship, not just with the people who formed the organization, but also with the recipients therein. There's one charity that I do, and these people are persecuted in other countries, And part of what I, donate to is to help them to get out of the country, so that they won't be killed or persecuted, et cetera, et cetera. And the people who organize it are people I know and I trust explicitly, and I know what they do, and I know how they've done it, and I know they don't take anything from it. I know, so 100% of what I give is going to them. But as people they use the money to free people in these situations. Um, it's not uncommon to get letters when they get free, from them, whether it's to me specifically or whether it's to me as part of a group of hundreds of others that might have helped. It's very personal, and there's a power to that. There's a power to getting to know them, and know that someday I might meet them in person, and the joy that I'll have and they'll have of knowing what my part was and what they went through, and knowing that I could be there to help them, and so forth. Um, and the organizers and so forth. So it's knowing that direct impact, it's seeing that impact and feeling that impact that you have. So if I were going to give to a university, I'd want to be part of a specific scholarship fund, and I'd want it to be specifically focused to specific types of people, and I'd want to be personally involved in helping to choose who that is going to be. And I'd want to at least have the opportunity to say, I really admire who you are and what you are, and what you've accomplished at such a young age. And that's why I want to give you this scholarship to help you finish your college education without having to take out loans and so forth. And I want to know the power of what I'm doing and why I'm doing it. And when I learned this for the first time was about 20 some years ago. I was reading a story about these people who had been going to church for years, and they were retired, and they were living a relatively typical retirement life. They were retired, looking for things to do. They play golf, or they would go on trips or whatever and so forth. And all of a sudden one day in church, and this was like during the 1990s, this group came in, and they worked with the people in that Bosnia Herzegovina war zone in helping them to survive, or be able to get out of a dangerous situation or whatever. And they were very touched by it, and they decided, why do we just sit here holding on to everything we have when we could at least take some of it and help these people? And so they got involved with the organizers, and they got to know the organizers well. And they also got to know the people that they were helping occasionally well. And they talked about how it just totally transformed their retirement. Knowing the impact and seeing the impact, in my opinion, is an incredibly important part of charitable giving. Because if you think about the foundations of charitable giving, it was seeing somebody who was poor or in need. It's the story of the Good Samaritan, right? He sees somebody's beaten on the side of the road, and he has compassion over him, and he bonds with that individual. He takes him to a hotel, and says to the innkeeper, well, first he put salve and things to help protect his wounds and things, and then he takes him, puts him in an inn, gives the guy money, and says, take care of him until I return, and when I return, if I owe you anything more, I'll give it to you, but take care of him. That's what charitable giving was like until, I'd say, the 1800s, when charitable organizations started to evolve, and charitable organizations started to use business techniques and psychological techniques to encourage you to give. But one of the most powerful forms of giving is your friend has somebody that's in need, and you give out of you're not going to get any charitable receipt, you're not going to get any tax deduction, but you're giving to that individual because you know that they're in need. Anonymous giving. Anonymous giving is by far one of the other most powerful things charitable giving. And you might say, well, isn't that contradictory to what you just said about seeing the impact and so forth? Yes, it is contradictory, but there's two forms of powers of giving. One is seeing the impact and knowing the impact and being part of the impact and developing that deep relationship. The other one is nobody but you know what you did. Nobody but you. And in my opinion, there is a God in heaven that sees you in secret and says, see what he did? He has no ability to prosper from that. He has absolutely no ability to prosper from that. But he did it out of a heart of generosity and compassion and charity. And I will bless him. I will fulfill him. I will show him the impact and let him see and know the impact from what he did. Maybe not in that person's life, or maybe you will see it in that person's life, but who knows? But to me, that's an incredible gift to be able to receive from someone, is anonymous giving. And I am a person that reads the Bible frequently. I'm very well versed in the Bible. I've been reading it for 25 years now, cover to cover. And people talk about charitable giving all the time, 10%, 10%, 10%. You got to give 10%, and to me, that's just absolutely mind-boggling, because that's not what I read in the scriptures. What I read in the scriptures is that God doesn't bless you because you give 10% to some organization or whatever. The scriptures are very clear. Give to the widow and orphan who have no ability to give back to you anything, nothing. They have no ability to repay you in any way, shape, or form. And I will bless you. I will take care of you. I will show you the joy of what you just did for that person. And to me, anonymous giving or impact giving, where you're giving with a charitable intent to know the organizers, to know the or the recipients, either or, to know them, to know what you did, not just giving a hunk of money here or there, et cetera, and saying, I feel good that I gave, $250 to whatever, and it's going for a good cause. And me and a million other people gave some money to that organization, and that's what drives them. There's nothing wrong with that. If you want to do that, there is nothing wrong with it. My point is the power of charitable giving and getting that economic benefit. If you're intending to get the economic benefit, we went through those points. But the other side of the coin is the power of giving charitably and why it's so powerful to give charitably. Because like I said at the very beginning, take a swimming pool, fill it full of water. Take a spring and create a stream over rocks that goes into a pool that overflows and flows into something else. And it's that stream, it's that pool from the stream that will always be fresh water. The swimming pool will get polluted within weeks. And when we want to hold on to what we have, it's logical that you will have more money by not giving money away to charity. But in my mind, being charitably inclined and doing it wisely, you can't just, I see people sometimes say, I give everything away. I'm ridiculously generous. Well, there's a gutter lane on each side, and giving nothing away or thinking that you're giving, this amazing amount and you want great publicity out of the amount you're giving or whatever. And giving should come just strictly from the heart. It should be an intuitive feel. And you just know that this is something in front of me that I need to take care of, that I want to be a part of. and I'm going to. And whether I give 1% of my pay or 15% of my pay or assets that I have no idea. But you have to determine that. That's my my presentation on charitable giving. I hope it was beneficial to you. It's a topic that is near and dear to me, and I hope that you too are incredibly charitably inclined, because God has blessed us with what we have, and we will be held accountable for what we did with what we had. And were we strictly focused on ourselves, or were we focused on what purpose it is that we have what we have? With that, this is Drew Tignanelli saying God bless.